Meet John and Suzanne. John is the owner of an IT consulting firm in Washington, D.C., and he's 52 years old. Suzanne is a pediatric nurse in Bethesda, Maryland, and she's 50 years old. They have two children, Cindy, 17, and Mike, 14. John founded his consulting firm from scratch almost 10 years ago after leaving corporate America. The business does a lot of subcontracting to the private sector and to the federal government. He has 20 employees, mostly 20-something recent college graduates. He has identified one potential employee who could take over should something happen to him. John's company's gross revenue is about $5 million per year. His net income after paying all business expenses is $800,000 per year. Suzanne makes $125,000 a year as a pediatric nurse. John and Suzanne own their own home in Bethesda, Maryland. The home is valued at $1.5 million. They have $500,000 left on the mortgage, and they recently refinanced at 2.5% for 15 years. They also have a second home, which is a condo on the Delaware shore. The condo is valued at $500,000. They have $300,000 left on the mortgage, and they also recently refinanced at 2.5% for 15 years. Of their investable assets, they have $2.1 million in 401ks and IRAs, including John's current 401k, worth $500,000. His 401k from his previous employer is worth $1 million, and Suzanne's 403b plan is worth $600,000. They also have a total of $1.8 million in taxable accounts, including $1 million in market funds and $800,000 in various stocks. Additionally, they each have $2 million of life insurance in level term policies. They have saved $100,000 for each child in 529 college savings plans. John has no disability insurance, but Suzanne does through her job, which provides 60% of her income should she become disabled. They do not have long-term care insurance. As small business owners, John and Suzanne's financial concerns are most easily defined by splitting them into two categories: business and personal. On the personal side, they would like to retire in 5 years. Both John's business and Suzanne's hours are stressful. They would like to reduce their taxes if possible, as John takes home a lot of after-tax income. They would like to review their personal insurance, including life insurance, disability, and property and casualty. While they've done a good job of saving for their children's education so far, they would like to find out how much more they need to save to send their children to private universities. They would like to review Suzanne's benefits to see if John can take advantage of being a dependent on Sue's plan. They would like to review their current estate plan and potentially update it. They also want to make sure that their investment allocation is correct, as well as simplifying what they have. Everything is spread out all over the place, and they're not sure that they're allocated according to their needs. On the business side, they would like to review all of the retirement plans that are available to the business and make sure that they're in the right option. They currently have 401k with profit sharing. They would like to review their business insurance, including their group health insurance. And since they would both like to retire in 5 years, they would like to begin preparing the business for sale, including coming up with a succession plan and cleaning up the income statement and balance sheet. In addition to that, they would like to get a business valuation now to know what the possible selling price would be in 5 years. While they have an accountant, they would like a referral to a more sophisticated accountant who can help them tackle some of the issues on both the personal and business side. With so many complicated issues surrounding their business financial concerns, Michael suggested a team of people to help them address it all. With Michael at the center of the team, the other team members we suggested were an accountant, an insurance expert, a business valuation expert, a corporate benefits expert, a retirement plan specialist, and a business attorney. The accountant helped us to determine a strategy to begin cleaning up the income statement and balance sheet to make the company more attractive to a potential buyer. The insurance expert conducted an insurance review to make sure that John was covered for all potential liabilities. The business valuation expert came up with the reasonable valuation of John's business both now and in 5 years for possible sale. The corporate benefits expert determined a comprehensive strategy for corporate benefits, which included incorporating personal and group policies for the best outcome of life, disability, and long-term care insurance. The retirement plan specialist determined, after an internal census was conducted, that it would benefit John greatly to install a cash balance defined benefit plan, otherwise known as a pension plan, on top of the company's 401k to save more money in a tax-deferred manner. The business attorney developed a buy-sell agreement with John's potential successor and funded by Key Man Life Insurance to make sure that Suzanne would value the company in case John died prematurely. On the personal side, we started by working with them to develop a comprehensive financial plan, especially focusing on looking at their current cash flow needs and funding for the various goals. We determined the range and how much they would need to save annually to fund their retirement, especially if they want to retire early. We also determined how much of that retirement was dependent on John selling his business. We then ran multiple options to test worst-case scenarios of their retirement plans. From there, we developed and implemented a diversified asset allocation plan, which supports their financial planning goals. This included incorporating their taxable and tax-deferred accounts into a tax-efficient portfolio, as well as putting their idle cash or their money market fund to better use. We also accompanied them to work with an estate planning attorney for a review of their documents, which they found needed to be redrawn. The reworked documents included new wills, a revocable living trust, durable powers of attorney, and advanced medical directives. We implemented the estate plan by retitling the accounts and changing the beneficiary designations of their retirement savings accounts and life insurance policies. We also worked to retitle assets in the revocable trust structure, especially the condo in Delaware, to avoid probate in estate. Special emphasis here was on reducing potential estate taxes given the amount John expects to sell his company for in 5 to 6 years. And lastly, we determined how much they would need to save annually to ensure they could properly fund their children's education, whether it's private or public. We helped them to set up automatic deposits into 529 college savings plans to simplify the process as small business owners. John and Suzanne know that their financial future can be quite complicated, but working with Michael, they finally have peace of mind and can rest easy knowing that their business and personal finance goals are working together to get them where they want to be. They are pleased to be on track for retirement in a few years and have their estate plan finally in place and working for them, have their children's educational savings on track, and to know that their corporate structure and benefits are working for them and for their employees. They couldn't have done it all without a step-by-step plan from Michael.